Amalgamation, a comprehensive problem where we solve this illustration, amalgamation illustration under merger as well as purchase method both. The balance sheet of SSA Limited and SBB Limited are given below. SSA and SBB are amalgamated to form a new company, SET. So SET is formed to take over these two companies. As on the above date, the purchase consideration is payable by way of equity share capital of ₹10 each and valued at ₹15. So 10 valued at 15 means the difference will be securities premium. The purchase consideration is calculated after revaluation of assets and liabilities as per the following. So purchase consideration is determined based on the net realizable value. Okay, net assets method. For SSA Limited, for SPB Limited, the assets and liabilities details are there. Requirements: pass journal entries for dissolution of SSA and SPB. Also prepare ledger for the dissolution of these two. So you have to pass a journal entry for dissolution as well as you have to close the ledgers. Also require the following under purchase method and pooling of interest method. That can be done later on. So we'll try to finish up first these two. Now, we have been given these assets and liabilities. Let's see. I am going to calculate the purchase consideration for SSA. Purchase consideration for SSA. First step. 80% of non-current assets are valued at 6,000. Balance are valued at 10% less than the book value. So non-current assets. The non-current asset of A being 7,000, where 80%, okay, and balance 20%, 1,400, 5,600. This one is valued at ₹6,000. This 1,400 valued 10% lesser, 140 lesser, 1,260. Am I right? So the new value being 7,260. Come on, get me the value. So the non-current assets valued at ₹7,260. Clear. Current assets are reduced by 200. So 3,000 reduced by 200. Now it is only 2,800. Current liabilities are reduced to 2,660. There's a savings. Right. So the overall value being 10,060. Current liabilities in this case being 2,660. So then 7,400 will be the purchase consideration. 7,400 will be the purchase consideration. Is that clear? Reserves and surplus includes a statutory reserve of 200 to be maintained for further period of 4 years. Okay, reserves and surplus. Usually under purchase method and pooling of interest method, we have two methods. Under purchase method, the reserves and surplus are not maintained. In pooling of interest method, we maintain, that you know. But in case of statutory reserve, under pooling of interest method, we no need to worry. But in case of purchase method, we will not take care of the reserves and surplus. But legal requirement is that you have to show the reserves and surplus at its own statutory valuation as per the requirement. So no other way under purchase method, this 200 will be temporarily shown as your reserve in case of statutory reserve. Until the statutory requirement is to be fulfilled, we have to maintain. Because of this reason, under purchase method, while passing the journal entry in the books of transferring company, they have to pass this entry. They have to maintain this one, statutory reserve account credit. As this 200 is shown in the credit side, equivalent debit should be named as amalgamation adjustment account, will be maintained temporarily at purchase method. Under pooling of interest method, we no need to worry about that because we maintain all the reserves and surplus. Hope now we'll be able to understand one additional adjustment. So illustration after illustration will be now including additional informations here. Right. This one. Okay. Some key points to be noted. Third one, statutory reserve. In case of pooling method, we don't have any adjustment. But in case of purchase, of course, we need to pass the entry. The entry list is here. This will be applicable only for the purchase method, that too in the transferee company. For the current illustration, for the said company, it will be passed under purchase method. Amalgamation adjustment account debit to statutory reserve on creation. As per the legal requirement, that amalgamation adjustment could means statutory reserve to be kept for 3 years or 4 years. That's how the information may be given. After the end of the 3 or 4 years, that may be totally cancelled. You can simply cancel that. So on cancellation, this entry is reversed. Temporarily you are showing and later on cancelling. How can you record that in the balance sheet? This is what about journal entry. How can you show this? Okay, under equity. Okay, under equity, you would show this way. Equity share capital as well as resource and surplus. Under the resource and surplus, statutory reserve, the value being 200 for this current illustration. Amalgamation adjustment account 200. So ultimately, the final value will be only 0. That's why you have to show related to these two items here. Hope now you'll be able to understand the requirement of maintaining statutory reserve until the legal requirement to be fulfilled, right? Further period of 4 years. Up to 4 years, you have to pass this entry, this entry to be passed and kept. By the end of 4th year, you just reverse and cancel it. Is that clear? Now, in case of SBB Limited, current assets are increased by 400. This is the SSA Limited. In case of SBB Limited. Okay. Current assets are increased by 400. So we have current assets being 2000. Now it is 2400. Goodwill is to be valued at rupees. Non-current assets, tangible assets and intangible assets. We don't have intangible assets for here. Here we have the value being 200. There is an unrecorded liability 100. Okay, can be included with 1500, so it becomes 1600. Now, no information regarding current asset is given. It means the book value remains worth as per the realizable value. You can take as it is. Right. Now, here the value being 7400, 1600 is subtracted. Then 5800 is a purchase consideration. Is that clear? Oh, this one is wrong, right? Okay. 200. I thought it's 2000. So 5600 minus 1600. 4000 is the purchase consideration. We got the value here. Is that clear? So we found the value here. Right. Now we will be closing the books. First we will close the books by preparing the ledger account directly. So I will prepare ledger account for closing these books in columnar form, for SBB separately, for SSA separately. As this is being amalgamation, two companies are going to be closed. Is that okay? So I will write within this page so that you will understand easily. So for dissolution, what you have to do? You have to first close the existing account. For that, you have to open realization account, purchase consideration account, purchasing company account, and the mode of receipt of purchase consideration, and this will be settled to the equity shareholders account. So these are the account you have to open. Record the balance sheet items. Equity share capital, by equity share capital. This will be SSA, the next one being SBB. SSA and SBB. Close the books of accounts, equity share capital, transfer to the equity shareholders account. Here the value being 5,000 and 3,000. Reserves and surplus should also be meant for the owners, 2,000 and 500. Current liabilities should be closed by transferring to the realization account, 3,000, 1,500. Non-current assets, 7,000 and 3,000. Current assets, 3,000 and 2,000. Purchase consideration of these two company being 7,400 and 4,000. I am going to include that here. Is that okay? Now, this is the purchase consideration. This is settled by way of what? Equity share capital. How many equity shares are going to be closed here? Okay, how many equity shares are going to be offered? Now, number of shares offered in this case being every share costing rupees 15. 10 but valued at 15. So divide this by 15. Now come on, tell me. I think you will be getting fractional shares. How many shares? 4? 493.33 share. 253. The liability 1,500 plus 100. Okay, 1,600. 400. What's the value of the goodwill? 200 only. Right. So you can change this to 400. Wrongly shown in text, so I correct this in the question itself. Right. Correct that in the question. Goodwill being 400. Okay. Then this value being 5,800. There's a slight error. One second. I'll just check. There will be printing error, I hope. Yeah, there's a printing error, right? So you'll be getting 4,000 only, then correct. You keep the value being 200 itself. So this value being 5,600, including the goodwill. In text, we have not included that, so correct that. And 1,600 is subtracted, so 4,000. 4,000 is the correct answer. If you divide this by 15, what's the value you are getting? 266.67. Now, what about the face value? Face value is nothing but you have to multiply with the 10. 4,930, 2,660. What about the securities premium? You have to multiply with 5 per share. 2,000. Come on, tell me. Yeah, come on. 493 into 5. 465. And here 1330. Isn't it? Then for the fraction, no, we cannot issue 0.33 share. For that, we can offer cash, bank balance like. Then 0.33 into 15, 5 rupees. 0.67 into 15, 10 rupees will be the value. One share's worth is shared between these two. Then purchase consideration being, including securities premium, the value being 7,400, 4,000. This is equity share capital, including securities premium. Sometimes we don't show the securities premium. If you want to show no securities premium, how this will appear? Okay, there are two logics. Don't show the securities premium. In that case, we never bother about this. Then the value being 4,935, 2,670 will be the purchase consideration. In Singar Academy text, I have followed this method. Okay, securities premium is not a matter like that's how I show. Okay, otherwise you can show the securities premium also, no problem. That's your choice. Clear? Okay. So go and refer. This will be the answer in Singar Academy text. I'll go with this one, this valuation. Okay. Equity share capital along with the securities premium, I'm going to show this. Okay. Let's see here. 7,400 purchase consideration. Here being 4,000 payable for realization, means all the assets and liabilities, this one 7,400 and 4,000, which is payable by set, so set account, and this will be payable by set. If any fractional share is there, no, for that usually consider cash settlement is made. So this will be payable by way of equity share capital of set, securities premium of set. For fraction, cash payment is made. Clear? So what is that value? Equity share capital being 4,930, 2,660. Securities premium 2,465, 1,330, 5 rupees and 10 rupees. What the money offered by set will be given to the equity shareholders. Equity share capital of set. To distinguish that equity share capital already exists, the new equity share capital offered to the existing equity shareholders, I use equity share capital in brackets set's equity share capital. Because the purchase consideration is offered by way of equity share capitals of purchasing company. Though the face value is 10, issue price being 15, the difference between assumed to be the securities premium. I show that securities premium in the account, or I don't want to show. That's your choice. Then this will be 4,930. Securities premium 2,465. Cash or bank 5. 2,660. 1,330 and 10. and 10. Close the realization account to find out whether there is any profit or loss on realization. In case of SSA, we gain 400 rupees. For SBB, also we gain 500 rupees. That will be transferable to the equity shareholders account. Here, realization 400 and 500. Finally, if you tally this, it will be automatically tallied. What happens, sir, if I don't consider the securities premium as a part of purchase consideration? If I am removing, this will be decreasing, this value will be decreasing, this value will be decreasing. As this one decreases, there will be realization loss. That loss is transferred here. Okay. So rather than this way, you can work out the other way also. Okay, considering without considering. Come on, make note of it. Now, let me pass the journal entries here. In Singar Academy text, I have passed entry without considering the securities premium, but here I have considered securities premium. Yes, journal entries. While passing the journal entry, you have to pass the journal entry for assets, for liabilities, transferring owner's fund to the equity shareholders. 3. Okay, with that, balance sheet items are closed. Thereafter, now it's our duty to pass the entry for the treatment of purchase consideration. This one, 4th, who has to pay 5th, and how this is settled. And the settled item is meant for whom? Equity shareholders. 7. And don't forget to incorporate the profit and loss on this. 8th. So that's how you can very easily keep the past journal entries to be passed in your mind. Now let's start with the first one. Realization account debit. Realization account debit. Okay, to non-current assets, to current assets. The value being 7,000, 3,000, 10,000 for SSA. To reduce my workload, I post here SBB. 3,000, 2,000, overall value being 5,000. If you ask me why don't we record the purchase consideration here, it's very simple. That's only for the valuation of purchase consideration. We never bother about showing that anywhere here. But in case of purchase method, we have to consider the revaluation method. In case of merger method, we take only the book value. That too will be applicable only in the purchasing company. In the case of selling company, we are going to close the books of account. To close the books of account, whatever the value already available in the books will be reversed. We never bother about the realization value here. Right, second one. Second one being current liabilities account debit to realization. To realization, the value being 3,000 and 1,500. Then third entry is all about equity share capital and reserves and surplus account debit to equity shareholders account. The value being 5,000, 2,000, 7,000, 3,000, 500, 3,500. Fourth entry, purchase consideration. Purchase consideration account debit to realization account, the value being 7,400, including the securities premium, identified as a separate value. Here 4,000, 4,000. If you remove the securities premium, the value will be totally different. 7,400, sorry, 7,400. Then fifth entry, who has to pay the purchase consideration? Set. So set account debit to purchase consideration, the value being 7,400, 7,400. For SBB, it is 4,000, 4,000. Then sixth entry, the set mode of settlement. Equity share capital of set, securities premium for set's share, and cash from the transferee company. So the value being 4,930, 2,465, 5 rupees to set, 7,400. For the other company, 2,660, 1,330, 10, and finally 4,000. This will be given to whom? Equity shareholders of the transferor company. So equity shareholders account debit to equity share capital to securities premium to cash, 7,400, 4,930, 2,465, 5. Here 4,000, 2,660, 1,330 and 10 and 10. The last entry being the loss. Okay, loss. Realization account debit to equity shareholders account. We gain here, realization gain. Okay, 400, 400 and 500, 500. Clear? So now I have to pass the entry for set company. If it is clear, text me, we will move on to the next one. Only in the books of purchasing company. No, we are not going to amortize. The legal requirement maybe you need to keep that for 5 years or 10 years. Once that year is over, you just close it. So in taxation, to gain some benefit from the government, okay, you have to maintain statutory reserve for 4 years or 5 years like. That's a legal commitment to ensure that you are not misappropriated that fund. Once that year is over, you can use it for any purpose. It's only namesake. Okay, in taxation, we may have lots of schemes. Earlier, depreciation, additional depreciation and all. Even some cases, you need to keep 100% of your profit set aside somewhere or deposit in some schemes like. All these things are government's requirement. Government gives you 1 lakh rupees for some development for your company as a subsidy. I got it, but you have to keep it as a reserve for some 3 or 4 years. You have to prove that you have used it for proper purpose. Once it is proven, then the government is happy, you can use it for any purpose. 7th year, you can use it for any purpose. So it's a dummy account and reversed automatically. Clear? Now, I am going to pass the journal entry in the books of set. In the books of set. Yes. In the books of set. In the books of set. So for SSA, they have taken the assets, so you can club both under purchase method. Under purchase method. Under purchase method, what happens? I am in need of the book values, right? I'll take this one also. When I need this one for pooling of interest method, not now. Under purchase method, I have to consider only realizable value. Okay. Business purchase account debit. Business purchase account debit to liquidator of SSA as well as to liquidator of SBB. This is single book, right? We are going to pass entry only in the books of set. So you can combine both. Earlier, this one is all about for SSA separately, SBB separately. So you have to pass the entry for SSA separately, for SBB separately to close those two companies' accounts in their own temporary book, in their final book, right? Yeah. So what's the purchase consideration? 7,400, 4,000, 11,400. Then for that we are getting various assets. We have to take at realizable value, okay, under purchase method. Non-current assets account debit, current assets account debit. Even we have the goodwill account debit to current liabilities to business purchase. Non-current asset being 10,260 and current assets being 5,200, goodwill 200, current liabilities 4,260. Is that clear? 4,260. Now business purchase being 11,400. Tell me whether it's tallying or not. Tally. Right. But if you skip what? The securities premium, the purchase consideration is very lesser, then the value may be totally different. Okay, you will be getting capital reserve. If you get capital reserve, that capital reserve can be set off with a goodwill. Goodwill and capital reserve can be set off. Goodwill is an asset and capital reserve is equivalent to liability side item. Don't show goodwill as well as capital reserve both in your books. You can set off one. So as I am taking the realizable value and the purchase consideration at the real value, including the securities premium, the way how it appears is totally different. Is that okay? In Singar Academy text, I have considered only the book value. Okay, means the excluding securities face value have been taken for the purchase consideration. The value may be different. Under purchase method, what is eliminated? We have eliminated all the reserves and surplus, but legal requirement is there to show statutory reserve. So for that, the journal entry being amalgamation adjustment account debit to statutory reserve. What's the value? 200 rupees. Am I right? So you have to legally show this value. Now next one is mode of settlement. Mode of settlement. Liquidator of SSA and liquidator of SBB debit to how do we settle equity share capital, securities premium to bank, or simply current asset, a part of current asset. Then this will be 11,400, 7,400, equity share capital being, come on, add up these two. Okay. 7,400 and 4,000. Yes, come on, get me the value for equity share capital. 7,590. Next one, securities premium 3,795 and current assets being 15 rupees for both. For both. Now balance sheet. Business purchase got eliminated. Liquidator got eliminated. Leftover item, equity share capital, the value being 7,400 and 7,590, no? Okay, 7,590. Securities premium 3,795 and non-current liabilities, or we don't have non-current liabilities, only current liabilities. This value being 4,260. What's the value? Statutory reserve also we have. Statutory reserve 200, amalgamation adjustment account 200 negative, 3,795. Overall resource and surplus will be 3,795 only. Clear? And 11,385. Non-current assets, intangible assets, goodwill 200. I missed the current liabilities, right? Okay. Yeah, current liabilities. Current liabilities being 4,260 and 15,645. Non-current assets, under that intangible assets being, these are recorded, intangible assets being 200, tangible assets being 10,260, current assets being 5,200 minus 15, 5,185. Hope you will be getting the value total. Okay. In Singar means probably in Singar Academy text I have considered only the equity share capital's face value. Face value. In that case, this 200 may be totally cancelled. This will be shown at the face value. We don't have what? Goodwill. Instead of that, we may have the capital reserve newly included. So, securities premium is also missing. Okay. So, you just remove the 3,795 from the securities premium and remove the securities premium in equity share capital. See how this will appear. I will show here. If I remove the securities premium, what is the face value? Come on. This is 7,590. Securities premium being dash. This will be 0 only. Okay. Tangible assets being 10,260. Current assets being 5,185. Okay. Now current liabilities being 4,260. Come on, tally this. Tally this. 15,445. 15,445. Get me the balance here. That will be named as capital reserve. Rather than securities premium, it will be capital reserve, I think. Come on, tell me. I think 3,730. 3,595. Okay. Let's check. Okay. Is this value correct? 4,930 plus 2,660? Wrong. You are telling now. Hmm. Come on, tell me the correct value. You have to add up these two. How much is that? 7590. Correct. Okay. Okay then. Are you able to understand this? Cross verify the numbers if there is any error. Else we will move on to the next one. Under pooling of interest method.
Balance sheet, the current is
5,000? 5,185 only current assets. Here also 5,000. So what happens if I follow pooling of interest method? Business purchase account debit to liquidator of SSA to liquidator of SBB. It will not have any change. But for pooling, you can show at its own face value only rather than securities premium. You can remove the securities premium, no problem. In this case, you can remove. Okay. I hope that I may remove the securities premium. In this case, will be meaningful. If I remove, what is the purchase consideration? This will be the purchase consideration without securities premium, 4,935. 2,670. What is the total purchase consideration? 7,605?
Yes.
Okay. Then this company takes over all the assets and liabilities at the book value. So for that, non-current assets, debit 10,000. Current assets, debit 5,000. Current liabilities, 4,500. To resource and surplus, 2,500. To business purchase, 7,605. Find out if there is any balance. 15,000 debit side, credit side how much? Come on, tell me. 14,000. So you get almost 395 excess can be added with this. Excess will be gain added to the resources surplus. In case of shortage, will be subtracted from resources surplus. Anyhow, resources surplus includes statutory reserve. We still maintain it remains unaffected. You no need to show it separately. Only in case of purchase method, you have to pass a new entry called AAA, triple A, Amalgamation Adjustment Account to statutory. So here it's not required. The next will be the payment entry. Here I have not considered the securities premium. Can I consider the securities premium, sir? Here, of course, for the pooling of interest method also, you can consider that. Purchase method, directly you have the choice. Either you can take at face value only, or securities premium also can be included. Because of that, there will be slight change. Value will be changed. Now, liquidator of SSA, liquidator of SBB, debit to equity share capital, to securities premium, to current assets. Okay. So this value being 4,935, 2,670, equity share capital being how much? You have to add up these two. 7,595. We don't have the securities premium here, so we cancel, right? To current assets, 15. Now in your balance sheet, business purchase got eliminated, liquidators got eliminated, leaving these things only. Equity share capital 7595, reserves and surplus 2895, current liabilities 4500, 14,990, non-current assets 10,000, current assets being 4,985, 14,985. 5 rupees difference is there. Probably equity share capital 7,090. Okay. Now it's tallied, right? Yeah, come on, finish up copying this. Question number 6, amalgamation comprehensive problem. New company AB Limited is formed to take over A and B in the following terms. For A, equity shareholders of company A will get each equity shares in company AB for every share held in company A. Right. So what happens? What method of purchase consideration is adapted here? In the very first case for A, they offer equity shares for exchanging the equity shares. Purchase consideration for A. For A, equity share capital. Equity shareholders of A company will get each equity shares in company AB for every share held in A. Means 1:1 share. 1:1 ratio. How many shares are there in A? 10 rupee shares. Cut this. So 100 shares are there. In thousands, 100,000 shares are there. Here also 100 shares are going to be issued. Right. So then 1,000 rupees. Equity shareholders of company A will get 5 rupees for every equity shares held in company A. Apart from that, they have offered bank cash balance also 5 rupees per share. How many shares are there? 100 shares are there. Okay, they already have 100 shares. For 100 shares of company A's shareholder will get 100 shares in AB, per share being 10, and for every 100 share you will get another 5 rupees to motivate to surrender your shares. So from this it is very clear, if you are being the shareholders in company A holding 1 share, you will get 1 share in which company? AB, as well as you will get 5 rupees cash. 5 rupees cash. Now 12% preference shareholders will get 15% preference share capital of AB in equal numbers. Preference share capital. 12% preference share capital, shareholders will get 15% preference share capital. Okay, equal numbers, 1:1. Okay, so now their preference dividend being 15%. How many preference shares are there? 100 rupees each means 4 shares are there. Okay, here also they will get 4 shares at rupees 100 each. And 10% debenture holders will get 12.5% debentures in AB, where the interest available for the debenture holders remains the same as in the company A. See, anything offered to the equity shareholders as well as preference shareholders will be forming part of the purchase consideration. Anything offered to the debenture holders is not forming part of the purchase consideration. So here, this will be purchase consideration. The debenture in exchange of the existing debentures, 12.5% debentures are offered, okay, to the existing debenture holders. It's not part of purchase consideration, settlement of debt. It is settlement of debt. And in this case, very interesting one is existing share debenture holders are getting interest at the rate of 10%. Because of that, they are offered new debentures. In the new debentures, they will be getting 12.5% debenture interest. Naturally, you'll get more interest, right? If you are being 100 rupees share debenture holders, earlier you get only 10 rupees, 10% means. In the case of new debentures, 12.5% will be your interest. So instead of 10, you will get 12.5. But what the statement is given here is the interest available for the debenture holders remains the same. Earlier also you get the same 10 rupees. Now also you get the same 10 rupees despite the increase in the rate of debenture interest. It means they are going to reduce the debenture's face value. It's very simple. This way you can calculate old rate by new rate. Old rate by new rate into the existing debenture value. Okay. So here what happens? 10 by 12.5 and existing value being how much? 200. Then what about the value? 160. 160 is nothing but settlement of debenture. It's not part of purchase consideration. It's only settlement of the debentures. And original debenture value being 200, but settlement is only 160. The difference between these two is the gain only for whom? Purchasing company, not for him. Not for him. Now let's go for B. So what method we have followed? Payment method is followed. Which method is followed here? Payment method. So equity shareholders are very happy. If you are giving one share in your company, 5 rupees for every share, I am very happy to give my shares. Preference shareholders also very happy. Okay, if you are giving 15% preference shares equal number, I am very happy. Debenture holders, none of the owner's business is the third party's one, right? Now, in case of purchase consideration for B, equity shareholders of company B will get each equity shares in company AB for every share held in company B. Equity shareholders of company B will get each equity shares in company AB for every share held. So here they are getting equity shares also in equal ratio. How many shares are there? So 50 shares are there, right? 50 shares are there. So into face value being 10, 500 rupees. 15% preference share capital of AB is given to the preference shareholders of B so as to maintain the preference dividend receivable in company A is same as before, similar to the earlier one. So 15% preference share capital will be offered. How do we calculate? Old rate by new rate into face value. So old rate being 12% 200. Okay. So 200 into 12 by 15. What's the new value? 160 is the amount offered. 10% debenture holders of B will get equal number of 12.5% debentures of the company AB. Equal number. So they will be offered 12% debentures also. 12% debentures. 12% debentures. For how much? Equal numbers. So earlier it is 100, now also 100. The balance, if any, is payable in the form of debentures. Apart from that, any balance in the purchase consideration is offered in the form of debentures. Now, what is that balance? I am not aware about that. then automatically it's not a payment method. You can understand this is a net asset method. If you are not able to find out the purchase consideration by summing up the various contributions received from the transferring company, then it is called other method, maybe net assets method. Here we have been given goodwill also. So naturally you have to go for purchase consideration under net assets method. So I'll go with this. So purchase consideration under net asset method. Total assets. Total assets as per the books 1200. Okay. Apart from that, this company has goodwill. Goodwill being 100,000s, 1300. And the liabilities being, we have two liabilities 100 plus 200, 300 rupees. Okay. Non-current liabilities plus current liabilities 300. Then purchase consideration should be 1000. The purchase consideration what we have calculated is posted here. 1000 should be the purchase consideration, where 500 and 160 already offered. There's a shortage being. What's the shortage? 340. Cindy. 340 will be debentures. Balancing figure. Apart from that, 12% debentures is also offered for the debenture holders, which is 100. Hope now you'll be able to understand the purchase consideration. Clear?